The first trading evaluation I ever took, it was with TopStep for 150K, and I started it in the first week of December, and I was done with it by January 2nd, I believe. I don't think it's common for people to pass these evaluations on their first try, especially someone like me who just started trading futures November of 2023, which would have been last November. But I know it was because I was trading with good habits and I was just doing things consistently outside of trading that was contributing to my success in trading. So I wanted to make a video for you guys about exactly everything I was doing and why I believe I was able to do that on my first try. So yeah, without further ado, here we go. All right, so I think it came down to my risk management, my overall trading strategy, market conditions, knowing when to be adaptable, knowing when to not trade or not expect a lot of volatility, definitely trade reviews and replaying the trades, good and bad, psychology, and external discipline and habits. Okay, so risk management is, in my opinion, probably the most important other than strategy. People say that all the time. I agree with them. I fully believe that because of the way I was managing risk throughout the whole evaluation is the reason why so yeah, 150K account, they let you trade up to 15 contracts. If you trade 15 contracts, you are fully just like down to buy another evaluation tomorrow. Like, that's the way I look at it. So when I took this evaluation, I'm still like in the beginning stages of trading futures and getting used to the markets. I've already been trading it for around a month, a little over a month. So I was kind of used to it, but I was definitely not prepared to allow for a crazy amount of risk. So what I did was I traded a maximum of 2 ES contracts per trade. And I did that until towards the end when my trailing stop was no longer following me. So if you don't know, I'm guessing you do know if you're watching this video, but for TopStep, your trailing stop loss stops following you whenever you hit the 150K mark. So whenever I was 5K above the trailing stop, then that's when I moved up to 3 contracts, and I was not trading more than 3 ever during the evaluation. So what I was doing though was I was risking $400 on a trade. I was always doing a fixed risk of 4 points, sometimes maybe 3, but it was usually almost always a fixed risk of 4 points, which would be $400 if you're trading 2 contracts. So with a $400 risk per trade, that allows for, we're calling it 11 trades in a row max loss. So that is definitely more than enough room for error, in my opinion. I think if you're losing 11 trades in a row, something's obviously wrong with your strategy, and you should probably figure that part out. So anyway, yeah, that's what I did for my max loss, and I would always walk away. I never had 3 max losses in a day on my evaluation, my first evaluation, or any evaluation, I guess. I never had 3 max losses in a day. But if I would ever take 3 max losses, that is when I am walking away for sure. So yeah, that's pretty much what it looked like for a daily risk side of things. Now for my stops, like I said, I would always risk 4 points, set max. This is what I did for almost the entire evaluation. And my take profits were always at least 10 points unless I was just trying to make sure I locked some in, which honestly, I probably only did that once or twice. So usually I am always taking the trade off. If we are hitting 10 to 15 points, I would definitely always take the trade off and lock that in, because I just found that I was trading ES and that system just always worked really well for me. I find that you can definitely get bigger trades than 15 points or 10 points, no doubt about that. But 1, you might have to wait some time for that to play out, and 2, it could very well reverse against you and completely just wipe your profits away. So I would tell you guys, for every trade, you should either let your stop hit or your TP hit. that's always been the best thing for me. I've just found that whenever I say I'm in a trade and my position is up 5 points, I just find that if I move my stop to break even too early, it might tap it and then it might keep running without me, and then I might be sad that I moved my stop when my original stop was at an actual point of invalidation. And let's say I get stopped out, but my trade thesis is still not invalidated. That's obviously not something you want. That one hurts. So my tip for the evaluation is definitely just let the stop hit or let the TP hit, and that's how I'd go about it. Now, these days, if I'm up on a trade above 7 points, I'm fine with moving it to break even, because usually I just feel like if your trade's 8 points, 7, 8 points in your favor, then you might as well just protect the risk and lock that so you get a free trade. So yeah, with the risk to reward situation that I just explained to you guys, this is what my profit calendar looked like. As you can see, the first week I had on the evaluation was really good. I just want to say, throughout this whole evaluation, I am not by any means perfect. This is just what it looks like when you hit that 10 point, 12 point, around there profit target, you lock it in, and then you walk away for the day. I was like, literally, if I win a trade, I am done for the day. That's just how I did it. I'm not saying that that's the best way to do it. I'm saying that's how I did it on my first evaluation. As you can see, my losing day, the worst one I had was 675. As you can see, all of my winning trades are more than 2 times my more than 2 times my losses. So if you look at the top, you can see throughout the evaluation, I had around a 50% win rate. My profit factor was around 1.82, and my average win to loss trade, you can see my average loser is 422, around there, and then my winners are less than 1,000 here, because towards the end I was kind of locking wins in, or locking profits in, as I was going. So most of my trades were above 10 points. That was what an average trade looks like, and here is what the combine chart looked like the entire time. I had a great start, and then I flattened out for, let's call it, like 8 days. So 8 days it was kind of zigzagging. I couldn't figure it out. I remember I made a bunch of mistakes throughout this 2 weeks right here. I remember trades going above my profit targets, which would, let's say I had a trade in a winner for $1,200. Like, I remember a few days I was chasing more than 12 points and it bit me in the ass. I remember there was just some bad entries in here and just mistakes. You're gonna make mistakes. You can't be perfect. But we ended up moving forward eventually, and we basically won 2 good trades, and then that put us through the finish line. So that's what it looks like on the TopStep chart. So my strategy was basically a combination of multiple people's strategies. What I like to do is, as you can tell by the bottom right, I like to mark out certain levels: previous session highs and lows, pre-market highs and lows, previous session open and closes. And I've just found that price tends to react off these levels. So I have my levels in mind, and I also do supply and demand zones. I have my levels in mind for the day on potential targets or potential reaction areas. And what I do is I have Bookmap up and I read the order flow and try to gauge what's happening. So that is how I trade. I try to be adaptable. I don't go in with like a strong bias every day. I try to have a bias for both sides. I try to have a thesis for a bear case and a bull case every day. So I'm never trying to go into the market overly leaning one way. So let's just read through these. So yeah, I explained to you adaptability. I explained to you how I mark my zones out, my areas. Catalyst is something that definitely can play a part. Maybe not every single day or every single trade, but you know the VIX is kind of inverse to the ES. The VIX is inverse to the ES. So if the VIX is ripping high, you can assume ES to sell off. and the dollar is pretty much the same thing. Certain equities, you might have certain equities doing really well that are just pulling ES up with them, or opposite of that, doing really poorly, pulling down. And times to trade. So if you've watched any of my videos before this one, you know that I like to trade only from open to 11 Eastern, which for me is 10, but I'm not looking for entries outside of this window. And this is what I did for the whole evaluation as well. So market conditions is definitely something that plays a huge role. So as a scalper, you need volatility, you need volume, and every day is not the same. So basically you got to get a feel for how the market is that day, and it could be different depending on certain news that might drop in the week or at the time of day. And basically you just want to make sure that your market conditions are going to be in line with how you're going to trade. If it's ranging, you don't want to be having tight stops, because low volatility ranging markets are not what we like to trade if we're looking for tight stops and, precise positions. Yeah, so market conditions, you just want to make sure you're aware of the news events. Like, for example, if there's going to be a big news event, just for like this week, for example, Tuesday we had PPI, and then today we had CPI. So I knew that Monday there was a chance that we would range for a while on Monday, which is exactly what happened after we had an opening sell-off. So just being aware of those can definitely open your eyes to what might be a good or bad thing to do. So external disciplines, this is something that I believe helps a lot more than people think. So I was never waking up out of bed and hopping on my computer and just starting to trade right away. I think people do that, and I think that your brain needs time to wake up in the morning, and I would definitely not recommend that to anyone if they're trying to do an evaluation and take it seriously. So I recommend always waking up an hour and a half before the market opens. So waking up, definitely give yourself a good amount to get your brain working and then get your blood flowing. This always definitely helped me wake up to some push-ups, some ab work, any type of just movement that gets your brain working better and get your body more awake so that you can be as aware as possible, because awareness is definitely the key when trading different conditions and different situations every day. Getting hydrated right after you wake up, that's just a good life tip in general, but for trading, it definitely, you got to treat your body like a freaking Ferrari, bro. Like, it's some of this thing might sound crazy to people, but like, I'm telling you, this stuff seriously impacted the way I traded. And if I don't do some of these things, like, I fully will notice that I might be a little more foggy, or I might be more prone to bad decisions in trading. So this is what I did damn near every single day, all of these things. And I would not tell you to do them if I didn't do them, because I believe that fully had a good role in my trading. So another thing is, don't eat when you wake up. A lot of people eat breakfast. I am of the belief that unless you're doing some intense physical activity like weightlifting or something, you don't need breakfast before you trade. Like, your brain is going to be very clear if you don't eat. I don't know if anyone that's watching this, I'm sure a few have heard about fasting, but I've noticed when I fasted, my brain is like hyper clear. Like, it's just amazing. So I don't eat in the morning until I'm done trading, and I did that throughout my evaluation as well. And then another thing, the last thing, if you're waking up and trading in a nasty ass, dirty environment, the clutter in your subconscious mind is going to impact your decision making. Which brings me to the psychology of all of this. So when you're trading an evaluation, I think that one of the biggest reasons that I passed on my first try was that my risk size allowed me for 11 losses in a row. So I was not rushing myself. I was not trying to pass in the first week. I was not trying to pass it in a few days. I literally had no timeline on when I was going to pass it. I knew that with my my profit estimate was around $1,000 to $1,200 per trade, per winning trade, then I basically need to win around 7 trades in a row. I think it's like 7.2 or 7.1 trades in a row. So if you trade every day and you trade with real strategy and you trade with real confluence and conviction, you're going to win 7 trades. It might not be in a row right away, but you're going to win more than 7 trades. But anyway, don't be rushed, and do not be scared whenever your strategy is telling you to enter a position, or you're reading order flow and it's telling you, hey, there's large buying here, or there's large selling here, or whatever it may be. You take the position. That doesn't mean enter positions that are not planned for or random. That means whenever your strategy is lining up, that means you take it because you're here to risk in the first place. That's what you're here to do. So don't be fearful. Have zero attachment to your balance. I think a lot of people blow accounts because they lose a trade and then they're trying to make it back in the same day, and they might put a stupid position on that goes against them, and then they do it again, and then they just end up blowing their account. So don't think about the balance. Always think about your R multiple. Don't think about the dollar amount you are up or down. Just trade to win and trade as emotionless. I'm trying to think the best word for it. Just make sure you're trading in, like I say in the last tip here, is like you have to make sure you're trading in a professional manner. You don't want to be putting on positions that it's like, oh, here, news is coming out in 2 hours. I'm going to wait for that, and then I'm going to put on like an excess leveraged position, and then whenever it bites you in the ass, like don't be like sad about it. Like don't be taking trades like that. I don't even trade before news. Some people might say that's bad, or like I'm stupid for that. I don't care, especially on an evaluation account. I'm definitely not going to take a news position. I mean, you could still have your stop. If you want to do it. But I'm just saying that's more of a gamble. You don't want to be here gambling. You want to be here with conviction in your setups, and you want to be here when your strategy is telling you it's time to enter position. You don't want to be taking stupid setups. Be aware of your subconscious tendencies. We're all humans. We have thoughts. I think some people probably have more thoughts than others, but I know for me, I can definitely become a thinker, and I can definitely think. Sometimes I'm just trying to say here is like thoughts are going to pop up into your head while you're in a position, while you're trying. Maybe you're too eager to make some money that day. Thoughts are going to pop up in your head. You have to be aware of your thoughts. And I'm not saying that all your thoughts are wrong. I'm not saying all your thoughts are right. I'm not saying any of that. I'm saying be aware of your thoughts, be aware of your subconscious tendencies, and use your awareness to be able to make good decisions in trading. And then the last thing I have for psychology is to show up with the intention to learn and trade, like I said already, in a professional manner. So when I was doing this evaluation, I was showing up every single day. I was doing everything I said discipline-wise. I was not showing up to put trades on and try to make money. I was showing up to trade the strategy that I knew. I think that's probably why I was able to pass my first try. Trade reviews is always important. I believe you should review your trades, winners and losers, to see what went right, see what went wrong, and then take notes. Did you stick to your plan? Were you emotional? What could you have done better? Is there a common time your trades work? Is there a common time within that your trades start going? I'll just say one thing I've noticed in my own trading was my best trades only lasted like 20 minutes, around 20 minutes or below. All of my best trades that I took in that evaluation lasted around 20 minutes or less. And I always noticed that my losers going out of my direction immediately and whatnot. Just basically when you review your trades, you're going to notice certain things after you keep reviewing them and keep collecting data on them. That's why I use TradeZella. I love using TradeZella just because of all the statistics you're able to keep track of, and they just have them for you when you import your data. So I would recommend that to everyone. And that will wrap it up for this little explanation on how I passed my first evaluation. So I hope you guys took some value from that. And I'm gonna do another video on how I blew my first Express account in the first week. So I hope you guys tune into that. And yeah, good luck on your evaluations and take it easy.